Okay, it looks like we're good with the recording. So good. Let's get started. A couple of things as we take a look at the week. First thing I like to do is look at how the week ended last week, just to give some expectation. And as I look at the end of last week, I'll bring up this chart. This is I did one thing different with this chart. I went into the settings under the OFA Ninja framework, and I changed my bar colors so my volume profiles would stick out a little bit more. So what that means is now as I go back into the days and build a profile, it'll show up a little bit better. So this is my Globex profile, and let's just show you what this looks like. So you can see that a little bit better behind that backdrop. So what I'm looking at right now is a low volume area right around 92 for the day. For the morning, the pre-market, I can see, let me open this up a little bit more, that's kind of small. You can see that low volume area right there, 92.25, between 92.50 and 92.25. You can see a test back down to 92.50, and at that point what I would do is go back and look at the print, and this was at 4:30 in the morning my time. So I'd go back and look. I see weakness, weakness, weakness. Everything right now is looking like this is a pretty valid low volume area, and so I would be looking, still be looking higher. So this is a low volume area from the overnight. It's the high from Thursday as well. So it's a pretty key level for me for this morning. And as I look at the print, unless I see something different, I can see a little bit of activity here at the bid now. So this will be an interesting move pre-market to see if we get a test to the downside or not. And if it comes through, but this is starting to become a pretty key level for me this morning. So I changed my colors just to make the volume profile pop a little bit. You can see at the top of this morning, it really doesn't look to be a finish per se. This doesn't look done. So again, what I would do is I would come back and look at the top of this, and I can just see, and this is right at the European Open. I see a pretty significant amount of initiative buying, and I say initiative because this is a good number for the overnight, and it's at all-time highs. So this isn't necessarily new selling that's starting. This looks like initiative buying, and since then, as I look at this, it's come down, and when I look at the prints down here, this might be suggesting that these long positions may be at risk here of getting washed out before the S&P looks to move higher. We'll see how that goes. Can I show how to change those settings? Yep, I can certainly do that. So if you go into the indicators and go into Ninja, the body down and the wick down, I just make as silver. And then my body up and the wick up, I make as dim gray. So I just want the, in fact, I could make that a little bit different. I could make this dim gray and this a little bit darker, but this works out well. So I just changed the body down, make sure the body down and the wick down are the same color. Because again, I'm really using this chart to see the overnight volume profile. I'm not looking really to trade off of this chart. So right now for me, the actual bars aren't as important. So that's how you change those. You go into the OFA Ninja indicator and just change the colors. Yep, absolutely. So again, it doesn't look finished to the upside. As we look at a test to the upside, this latest test here, there's a low volume area, 1996.50. And here's the way I would look at this right now, unless something changes, is that we may see this area hold 1996.50 this morning. And if it does, I would start looking for, I don't know that I would take a trade pre-market here, but I would start looking for price to test back down to 92.75, 92.25, somewhere back down in this area. All of this data in the overnight is pretty thin. The market took off pretty quickly, moved higher pretty quickly, and then has just stayed higher. So we'll get into that as we look at my trade plan for the morning. But if price gets above 96.50, then I would start to look for this to test new highs and potentially open significantly higher and be testing 2,000 pretty easily. I had a weirdest dream last night that I woke up to the market trading around 2,300 on the ES. That was weird. So maybe it was a premonition. Who knows? Anyway, I changed this chart. This is my pre-market overnight chart, and low volume area here at 96.50, and then another one down here at 92. All right. So as I bring up the homework, I look at the day from Friday. 8:25 is our day today. Look at the open, not at 59. That open was, why that says 59? The open was 87.75. Make that change. Save it. Opening swing high was at 89. Opening swing low 85.50. So pretty good swing in the morning. The IB, as compared to the previous day, showed pretty good swing as well. So about 7 points in the IB, which is a good size IB, about average in the high side of average. When I look at our close, 88, compare that to the close of the previous day on Thursday, it was just a little bit off, a little bit lower, but the bulk of the day, and we'll go through that in a minute, was about the same. So the close was a little bit lower. Volume was higher. Overall volume for the day was higher, about 30% higher. And closing swing, relatively average. Price high of day, about 10-point day. And VPOC was a little bit lower than the previous day. But we're going to look at that. So some of this, if you just looked at these numbers, might suggest a little bit of weakening. However, when you compare Thursday and Friday, and we'll go through that, you'll see a different, at least for me, I see a different story. Let me bring that over. Right there. All right, so here's Friday, our VPOC at 86. VPOC from Thursday was higher, up at 89, with a little bit higher high on Thursday. I was at 92, a little bit higher high from Thursday. Anyway, when I look at this, and if I were to build a volume profile for the whole week, this is what I would see. So, the question I ask is, what is this market trying to do, and how good of a job is it in doing it? So looking at the 1 day, if I just compared it to Thursday, I would see that value is a little bit lower, but most of the activity is in the same range. So a little bit of a test further down from Friday, and not quite as high of a test from Thursday on Friday. But this looked like good responsive buying off the bottom on Friday, good responsive buying. And when I look at how this closed, there just wasn't a retreat on Friday. It was a pretty good range if I were to build a volume profile just from the time price moved back up into value. I would see VPOC around 87.25, so a little bit higher. So the close of this on Friday showed acceptance higher. Even the overall VPOC at 86, that volume still is showing prices being accepted higher. If you look at where Wednesday's range was to the top of 86, VPOC was at 86, an attempt lower, a finish higher. All of this is suggesting that this is accepting higher prices. And when we look at the overall week, let me bring this in a little bit. You can start to see some specific areas where this market pushed through and buyers really never relinquished. So a couple of places would be 75 and certainly this range between 70.25 and 69. So if we had bad news today, if something happened, if there was a significant test to the downside, this is where I would look for buyers to start stepping back in, is where they push through right here. So in this range between 70, 75, and say 69, as low as about 69, I would look for buyers to start stepping back in and trying to push price back up into this range. So this is where the overnight comes in. We can see the high from Thursday up at 92, and when we compare, so that was just the RTH sessions, but when we look at the overnight now, we saw this test up to 92. We got a low volume area at 92.25. So again, everything is pointing to this level being a key level for this morning, especially for a test this morning. So does all that make sense how I got to that point? And I'm just doing some initial kind of broad brush analysis of the market. Any questions about that so far? You kind of see what I'm looking at with the ES? Okay. Okay, good. So we know that this is going to be kind of a key level for us, 92.25, 92.50, and possibly down into the range on Friday. However, if let me just bring this back over. We have a little bit of a low volume area right here around 88 quarter right here. And we'll see this actually may play, and you can see here from the previous, the week shows it as well from Thursday and Friday, but a little bit of a low volume area at 88.25. So we at least want to keep that on our radar, whether you draw a line there just as a point of interest. I have that at just kind of an area point of interest. Close is right below it at 88. So this 88 to 88.25, 88.50 level, and maybe down as far, let's just say 87.75 to 88.25. So about two ticks here that I'm interested in as well, just because of this low volume area from Friday. So if we, and the fact that the close is at 88. So if we start testing back into Friday's range, I'm going to start looking around this level just to see what the print is doing. And if there's an opportunity, if I see sellers being held or buyers really getting aggressive, opportunity for a long. If price slides through that, right? So I'm always looking to manage my risk. So my risk on that trade is probably 87.50, which isn't significant. And if this breaks higher, we could be looking at 2,000 for the day. So it has a potential to be a really good trade. And if it breaks through to the downside, I don't need to give it more than a point. And I would start looking back down at this 84.75, 85 level for buyers once again to step in. If we start sinking below this 84.25, where this test was and these tests were, we had a responsive buying on the lows from Friday, and you can see a low volume area here at 83.75. If we start dropping below that, you can expect to see price go and test this 80.50 from Wednesday, and possibly down to that 79 to 80 level. And I would say that if we start to see acceptance below this 80.50 or even 82, 81.50 to 82, if we start seeing volume and acceptance lower than that, then something has changed from Thursday and Friday, and it may change how I look at buying and selling. But again, the print's going to tell me more. I don't want to get a bias on this, but I'll start looking at the print, maybe looking to see if buyers really are just getting weak. But I'd start expecting to see VP at least a tag of 80.50 and possible test even lower. So this level between 84.25, 84.50, just from this activity on Friday, tells me that if today we start getting volume below that, then something has changed from Thursday and Friday. Something has changed, and whether it's just a test lower or this will be a pullback, a larger pullback, I don't know. But that's kind of my my trigger, my level of my trigger to say, again, that something looks like it's changing in the marketplace. Does that make sense? Okay, so one of the things that I do is I'm trying to always find levels. You know, when I look at the market, I say, what's it trying to do? How good of a job is it doing it? Right now, it looks like it's trying to go higher. It looks like it's getting acceptance higher, especially the way it ended on Friday. How good of a job is it doing that? Well, Thursday and Friday look to be really good acceptance levels. We had good acceptance higher here, and then on Thursday and Friday, looking like good acceptance. It's doing a good job of trying to go higher. It didn't retreat on Friday afternoon at the close. Overnight still higher. So everything is pointing to it's doing a pretty good job trying to go higher. So what I do is I look for a level that says, or a range that says, what would it take? Where would price need to go and start gaining acceptance for that sentiment to change? What would signal to me, what's my range that would tell me that we might be seeing change in the marketplace? And then I'm going back to the print to validate that. You know, are the buyers weak? Are the sellers strong? Etc. To validate that. And as long as that condition occurs and we start seeing volume below or above a certain level that would indicate change, then I'm looking for my intraday levels, maybe some longer term levels to provide some trade opportunities for me, and I'm looking for the print to confirm. So that's my level that if we start dropping below this 83.75, 84.50, so this point in here, and start building any kind of volume, if we take a test to Friday's low and pop right back up, I'm not worried about that. That's not a change. That's just a test. And the market may do that, and it may knock people out. However, if it starts building volume and spending time, I start seeing two-sided trading below here, and I see active sellers, active activity at the bid, then something is going to again trigger that there may be a change in the marketplace. So I'm always looking for those levels, even intraday. I'm looking. What's really important to me is where's the market accepting price. So VPOC, those high volume areas, that's telling me where the market is or where participants are accepting price. And now I'm looking for a change from that. I'm looking for either a change higher or lower, or I'm looking for the print to confirm that it's still in balance and we're probably not going to see much movement. In fact, a lot of times in the intraday, like on Friday here, if the print is telling me, VPOC in the last half of the day is higher and we're getting rotation around VPOC, I'm just going to walk away from the market knowing that it's probably going to settle at that spot, either settle or at the very end of the day it's going to take off to one side or the other. So I'll just walk away because it's not really a market that I want to trade in, and I'm probably not going to get a lot of range, especially in August and on the ES. But there was one other thing at the end of the day. I'm going to open this up a little bit more. I want to see if you can tell me, what is it about price and what do you see in the volume profile that would suggest that or confirm that this market is in fact looking to go higher? Anything that you can see? This one's going to be kind of a tricky question. It goes back to the initial training that we did. It's not tricky. You got to know some of the elements or remember some of the elements of the volume profile. And P shape, yep, the P shape shows acceptance higher. I'll give you a clue. It has to do with Friday's volume point of control. Look at the price action. Yeah, failure of VPOC to really get through VPOC. I think that's what you meant. Wayne. So if you look at price and you look at the responsive buying as price tested lower, here is VPOC for Friday and actually for the week. But as price tried to test lower from 10:30, 11 o'clock on, that's Central Time, every single time it tried testing lower, there was responsive buying into and above VPOC. And even the last test down, it pretty much bounced off of VPOC. So remember, VPOC is price acceptance. And in the morning, where we had VPOC, we had rotation around VPOC, up, down, we had a bounce off of it, and then we had a good test down. So if you look at the overall day, for a while we had good rotation off of around VPOC, which is what we expect, right? Because that's fair price. Both buyers and sellers are willing to do business there because they believe that they can make money. It's a fair price. And so that sentiment was true here in the morning, and some of this may have, if you look at 9 o'clock, where the move down started, some of it may have to do with Yellen. Some of this may have had to do with Draghi in the afternoon. Either way, what this is telling you is that the sentiment towards the end of the day was that this was no longer fair price. And if I did a volume profile from here, from this bar to the end of the day, you would see VPOC higher. But the VPOC of the day, the participants kept rejecting and pushed higher. So everything in this is suggesting acceptance here, and I don't want to say rejection of lower price, but some additional confidence by buyers. And when you add in the overnight context, we have confirmation, at least here in the pre-market, and this actually may be a decent trade short right there. Let me just see. A little bit of weakness here. You can see if you look at the numbers here, you can see the activity at the offer, 96.25, 96.50, and this is one from a volume profile standpoint, risk reward standpoint. The overnight VPOC is back down here at 94.75. So if you're calculating your risk on the trade, this is a trade that may or may not work. Every trade may or may not work. So I'm going to look actually to, and I don't like the fact that but the risk reward on this trade is really good, because if it comes through, it may test higher. And like I said, the only risk to this that I see is that this was not, in my opinion, this wasn't finished up there. The profile is kind of showing that as well. So what I could do, yeah, that is a lot of strength, Gary. You're right. So what I'm saying, though, is if this gets held and it wants to do a test lower prior to the open, the most likely place for that test is going to be at least right here, down at 94.75. So when I look at the potential trade on this, I'm looking at least, a point and a half on this trade. But I also walk into this trade understanding that my risk is there's risk to the upside. There's a lot of pressure here. And that's the whole thing about trading. It's where the psychology will just kill you, is you don't know what's going to happen next. The more you can focus on the print, the better that you will be able to do. You don't know what will happen next. What you have to be able to get yourself to the point of is saying, I'm going to take this trade. I'm going to set my stop at this point. I'm willing to give myself X amount of loss, and I'm willing to accept that loss, and then get into the trade and manage the trade. If you start getting a lot of more strength at the offer here at 96.50, you can take 2 ticks on the trade. Take 2 tick loss, and if it stops you out, you're down 2 ticks with 2 contracts. That's $50. That's recoverable. That is absolutely recoverable. But if, let's say, for example, I want to get to 500 for the day, and this trade starts to work, and it does, in fact, get back down to 94.75 with a couple contracts, I could be looking at being up 150 or more, which means my target is now 350 more that I have to make to get to my overall objective. So yes, Peter, it is a higher risk trade. Absolutely, it's a higher risk trade. Every trade has risk to it, and as a trader, you need to understand and objectively get to the point where you say, am I willing to accept that risk? Is this a risk that I want to take? Because you're a risk manager. And if the answer is no, then this is a trade that you don't take. If the answer is yes, right, you make a conscious, objective decision that you want to take this trade, then you take the trade and you let it work, or you watch the print. And the fact that we see this strength at the offer at 96.25, and we see offer growing at 96.50, that absolutely may be enough to say not worth the risk. There very well may be a trade that looks better coming up later. In fact, if you look at the strength of the bid as this price has been moving up this time, weakness, weakness, neutral, weakness, weakness, weakness at the bid, all the way up here. We don't see any real strength here until this point. So with this activity and this looking unfinished up here, you may say this isn't something I want to take. But we do have a little bit of a low volume area coming up right here. And again, the other part you have to look at is, if this trade works, it's probably going to work for a point and a half at least, back down to VPOC, and even getting more towards the open, we may see price moving lower as a test. The other side of this activity here at you see the strength at the offer at 24.10 is relative weakness at 1996 at the bid, but look at that weakness as compared to what we've seen prior at this level. While it's relative weakness to the offer, there's still more coming in at the bid than previously. So there's an essence here that says that this right now, and this could change, there's an essence here that says that this is being held to the upside. Is it the volume profile that makes this attractive? The volume profile would suggest, and now I certainly wouldn't take that trade, and I would look to be out of this trade now at a tick or two. But my point here is that it's an opportunity. And once you see the opportunity, price gets to the opportunity, that's when you go back into the print and watching the print and understanding the context of the print, for example, weakness at the bid all the way up, starts to inform you and give you more data for your decision. But the reality is, at this level, this trade, and you have to make a decision whether you want to risk 3 ticks for the potential of 6, which is a 2-to-1 trade, 6 or more, makes sense to you. And if not, and you don't feel comfortable with it because of what you see in the print, then you simply don't take it. But the challenge is always to identify where the opportunities are, and then being able to objectively read the print and make a decision. And if this trade works, right? So if it goes higher and keeps moving up, great, let it go. But if this trade works, on the other side of this is you have to be okay with saying, all right, I made a good decision not to take that trade. Even if the trade worked, you always have to tell yourself, I made a good decision. Even if the trade, if the trade failed and you took your loss, or you didn't take the trade and the trade still worked, you have to tell yourself you made a good decision. If you start telling yourself things like, I should have done that, I can't believe I didn't take that, all you're doing is you're affecting your psychology. You are telling yourself either you're not capable, you're not good enough, you're not, and those are very strong signals, and they will affect your trade going forward. They'll make you doubt what it is that you're doing. So the more you can get away from that and tell yourself that you've made a good trade, you made a good decision, whether it was risk on or not getting into a trade, no risk at all, you have to tell yourself, I read what I read objectively, I made a decision. Whether you didn't take the trade or you lost, you made a good decision based on what you saw. So pretend I took this trade at 96.25 and the print is moving. What I would see in this trade is more activity I would look at this and say this is going up at least another tick. So if I were willing to take two ticks on this trade, I'm likely going to get stopped because my stop is going to be, my stop is at 96.75 and that's as much as I'm willing to take, then I'm likely going to get stopped because I know my stop as a retail trader is one of the first in line, and I'm likely going to get stopped at 96.75. So at this point, I would be looking to try to get out at break even or +1 on this trade. Even though it might work, it still looks like it's going to take at least another tick, a tick up. So I'd be looking to manage my risk on this trade right now if I was only willing to take a stop of 96.75. Now, if I was willing to take a little bit higher stop to 97, then I would start watching what happens at the print at 96.75. And if I saw continued strength at the offer at 96.75, then I would look to try to get out at 96.75, maybe 96.50, and look to take my 1 to 2 tick loss. But when I see 116 by 989, based on everything else, that tells me that it's more likely that this is not finished to the upside. Anything can happen. I mean, I can see some level of holding going on here at the bid, even though there's strength at the offer. So it puts a short at risk. I can still see some evidence that the offer is being held a little bit. So there's still a potential, and if if buyers relent right now, then they're likely to relent back down to the VPOC of the overnight and possibly even further, possibly all the way back down through the range at 93, all the way back down to this level and possibly a test of Friday's high at the open. Oh, you're welcome. But again, everything that I'm reading right now, and this still could come down, so there's some level of holding. But I've kind of said to get into this trade, I was looking at 96.75 as a stop. Looking at this print, that's likely to get hit. What it does after that, I just have no idea. But I can say right now, nothing is for certain, but there's a high likelihood that 96.75 is going to get tagged and my stop would get taken there. And what I don't want to do is I don't want to get in a situation where, you know, I put my stop at 97 and either buyers step in heavy and take this all the way through, and now, you know, another tick isn't that big a deal. But I don't want to get into a situation where it tags 96.75, it goes like 0 by 25 or 0 by 14 at the top, and now I have to sit here as the open gets a little closer and manage this trade. You know, I'm already at as much risk as I want to take on this trade with I guess at this point I would have to get up to 97 because it looks like it's for sure, not that's for sure, but it looks like it's more likely to at least tag 96.75 now. So then I start getting into the psychological games of, okay, gets up to 96.75. If it starts building slowly, but I can see more activity at the bid, do I hold it? I'm more likely now to raise my stop a little bit more. I just know that that game, that psychological game, typically does not lead to good places. Doesn't matter how much I've traded, doesn't matter my experience. I'm human. I know the patterns. I know that I want to win. And so if it starts doing that, I know my self-talk is going to be, well, you know, it was weak up at 97.25, so maybe I'll move it to that. Now I'm, you know, now I'm a point and a half on my stop, and I'm already backpedaling on my risk. That makes sense? So I would have looked to get out of that trade, even though it might still work. And this is just for me, but there are times when I will manage myself out of a trade and reduce my risk simply because I understand that it's a slippery slope, and the psychology of trading is a slippery slope, and that once price starts moving against me, if I don't have the discipline, I know that I have the propensity to talk myself into moving my stop. And I have never had anything good come from that, ever. And so for me, this is just for me, I would rather remove the temptation by managing my risk out and getting out of the trade than trying to guess or trying to stay in the trade, creating more anxiousness, creating worse psychology, more subjectivity. You know, and I've traded in front of a lot of people, and you know, you get it's easy to be a critic on the other side of somebody's trade. So there'll be trades where I'll take and I'll get out at break even or -1 tick, and the trade will turn around and work. And you know, people will say, "Well, why'd you get out of that? I mean, it worked. The trade worked. What were you doing? What were you thinking?" And a lot of times, the reason I'll get out of a trade is because I know myself. I know what I'm capable of doing relative to my stops. Does that make sense? And again, that's because I understand my own personal trading style. I know that I'm capable of talking myself into moving my stops. I want to win just like everybody else, and I know how quickly I can move from objectivity to subjectivity. And again, if I would have been stopped on this trade if I would have kept my stop at 96.75, which would have been, 2 tick stop. But it's a difference of being down $50 or being down 125, 150 to start the day. So, all right. The other thing I think that I talked about was looking at oil. Let me see if I can get an oil chart up because oil just opened. All right, I've got a volume profile from the open going. Not a significant amount of range. VPOC for the overnight was at 93.62. I can see activity to the downside here with VPOC yet this morning down here now at 93.49, price at 93.50. It's back down to this overnight low volume area right here. You can see it bounced off the 24-hour open, which oil does a lot of times. It's a pretty key level. And now it's coming through. So if we start getting distribution below this, I would start looking for price to continue down and possibly even into the meat of Friday's range. So if I look at Friday's range, I see VPOC all the way down to 93.15. Can see a low volume area from Friday right here where we're at, 93.47. Now, no pun intended, but oil can get, just because of the volume, a little slippery, meaning that because it's a lot lower volume, it can start moving through these levels. And then I would go to look at the print, and I'm just in sim here because I'm not actively trading it right now. I can see a lot of activity. Down at the bid. You can see a low volume area developing right here. This doesn't look finished to the downside. So there may be a short right there at 44. You can see a tag 44 went weak at the offer. Have a little bit of volume building out. So the short would have been, I would have never gotten filled short at 44. At least not at this point. But with this volume profile, there we go. I'd look for more activity to the downside. You can see how it came through, started building volume, tested right back up to that low volume area. And I'm usually trying to get in right in front of the low volume area. My stop would have been right above this 24-hour low here at, or 24-hour open at 47. So my stop would have been around 48. So you can see all this activity now. Let me open this up, and then we'll get back to the ES. You can see all this activity at the bid here, 108, 107. I'm going to go back at 5 minutes prior to the open. So I want to look around 7:55. That was a swing low. swing high. And a breakout right, you can see that low volume area right there, below the swing low. So when I read this print, especially on oil, when I see things like this right after the open, these numbers, 108, 107, I start looking for traps on oil. And I'm probably a jaded oil trader, but I start looking for traps. There might be a little bit of a breakout here to the downside. The trend certainly looks to be going lower. We've got a pretty good low volume area right at that 44, 45 level. So, couldn't get in on this trade. And you can see the activity back down here at the bid. It's getting heavy. I don't know that I would take a trade right now because this could finish pretty quick down to 30 or could just blow right through. One of two things are going to happen here. Is this thing is going to finish quick around 30 or 29 and then pop right back up, or this is going to continue significantly lower. So my trade would have been right in front of this low volume area. There's no way I would have gotten filled at 44. No way it would have gotten filled. Could have gotten a fill at 43, but not at 44. So at this point with oil, I typically look between, if trading with two, getting one off to at least cover my risk, because oil can bounce around so much, to at least cover my risk, and then trade that next contract, as far as it looks like it's going to go. So right now the volume profile, I wouldn't be surprised to see a VPOC shift down here. You can see all the activity at the bid, 108, 107, 110, 121. And remember, this is right after the open, so this isn't like buyers that are just getting out of their contracts. This looks like a new initiative selling, trying to push price down even more. And the risk on oil is you may see another slight push to the downside, and then a much larger move up. But the risk is that on oil, what I see a lot of times is retail traders getting in at specific levels, and then getting stuck, getting trapped. And in a short term, all of this short activity, all this activity at the bid will get stopped, and then it might head lower. But again, my only trade would have been here, and I would have never gotten filled. I'll go back to the ES here in a couple minutes. So what I'm seeing here is a lot of activity at the bid, and early on in oil, if I see here's the deal. This is my experience with oil. Early on, so within the first half hour, if I see a significant amount of activity to the offer at the upside, and I start seeing the offer held, then my risk is significant in trying to take a breakout trade, because in so many times with oil, they will trap these shorts or longs before extending price further. So I hardly ever look to take a breakout trade on oil. If I were going to take a breakout trade on oil, I would need to see several tests to the downside, but I would need to see a significant amount of buying pushing price up. So the test to the downside would have to show me weakness, and at the offer, right? I'm sorry, at the bid, strength coming back significantly at the offer, and then I would look to take potentially a breakout. But a scenario like that, I would never ever look to take a breakout. In fact, I would expect to see these sellers start to get stopped. But so there's still a potential trade at 44. You just need to have your stop at like 49 or 50. For 5 or 6 ticks. I wouldn't have my stop anywhere outside of that. All right, so let's get back to the ES, look at the trade plan for the day. We're about to open. So when I do my analysis, I have high volume area above that has confluence around 89.25, which is well below where we are. If we are to get acceptance below and put that 84 level as a potential test, what we're going to need to see this morning is VPOC around this number. So if we see VPOC around 89.25 after the open, then there may be a, then I would start to look for, a potential test down to that 84, 85 level. If we start to see VPOC around 89.25. This low volume area at 88 quarter, remember we talked about this a little bit earlier. If price starts moving back down into Friday's range and close was 88, I'm going to start looking for a potential trade around that. The next level is that 84 to 85 level, right below that. That's where I'll look for another trade. And if we start moving below 84, again, I'm probably hands off and just kind of getting, maybe let IB set and see where things are after IB. So the trade plan, you know, if I do my my morning commentary from Friday, a good balanced day, 30% more volume on Friday than Thursday. And on a Friday in late August, that's significant. It's suggesting acceptance of these higher prices as we did not see a retreat at week's end. Very good responsive buying on Thursday and Friday. Would also suggest acceptance and renewed buying at these levels. There was kind of a quote-unquote double top at 91.25, which was a high on Friday, and that's likely to get tested again. And any overnight breakout will likely need to get through that 91.25 to 92 level. Okay, so we'd have to get through that 91 to 92 level. And if we look at our overnight, let me get that back up here. If we look at our overnight levels, we can see a low volume area. Where did that go? Maybe it's back here. Yeah, we can see that right here. See a low volume area right there at 92 quarter. So that is still holding true. A very small LVA to 88.25, just above close. That could make for a potential trade on Monday morning, depending on the overnight and the pre-market activity. Otherwise, all data right now is suggesting a test higher. So my scenarios here, just based on the activity from Friday, if price opens above 92, 91, 25 to 92 range, I'm going to look for a long here. This was the high from Friday. This was the high from Thursday. So that's mine. If price opens above that, which it looks like it's going to, this is my potential long. And when we look at the overnight activity, last test lower, we can see that to be true. If we start moving down into Friday's range, then I'm going to start looking for a trade potentially around that 88 to 88.50. So if price opens below 91.25 or price passes through 91.25, I'll look for buyers to step in around that close level. If the print is strong to the offer side, I'll look to go long. Otherwise, I will hold and look for a potential long around that 80, we talked about this earlier, 84 to 85 level. So that's the next place I would look for buyers to step in. If price opens below that level, that 84 level, or gets below that level, then, and it looks like we're going to open up higher, but if it gets below 84, I'm going to wait probably until IB is done before I'll make a trade. That makes sense? So based on everything we've talked about this morning in the context of Thursday's activity, Friday's activity, does this all make sense relative to the trade plan? And you know, looks like we're going to be opening up. We're opening up in a minute and a half. We're going to be opening up above Friday's range, above Thursday's range. So this is our first area right here that we're looking for a potential long. We'll be looking for the print. If it gets through that, then likely a bounce at least off of that close area from Friday. And if it gets through that, then would look for price to at least get down to VPOC and tag VPOC from Friday, which is 86, and most likely test that 84 to 85 area. And if buyers can't hold here and we start getting any kind of volume below 84, then in my mind, that's my level. Something has changed in the market, and I might start looking for shorts. But I'm most likely going to let the IB settle and see where I might have a trade. So I'm going to move this over, get it out of the way. So our trade here at 96.25, remember I was looking for at least 94.75. Here, this just doesn't look finished either in the pre-market. So now we have an open. Our open is out of range, above range from Friday at 95.75. This actually should be way down here. I should have had this done before I started my day. Fortunately, price is not moving really quickly. Open, this would suggest to me that we might see a test lower here. If it's not taking off right away out of range, we may see a test lower. 95.75. So I'm going to put this, sorry, the wrong one. 95.75. Right now we have a very small opening swing. That is all the way down to 88.50. Our close from Friday is at 88. That's even lower. And then our closing swing low is way down at that 85 level. And that's much lower as well. Our low for, just going to get rid of that. All right, a lot of holding up here. Here's the deal. If this was going to go and not test back down to this, at least VPOC of the overnight there, we'll see what happens at 94.50, 94.75. But if this were going to go and buyers were just going to assert themselves for the day, it most likely price would have already taken off. So this low volume area from the pre-market at, where was that? Right around 96.75, 96.50 is held pretty well. So I'm going to hold here on the call here until in the room until we get at least what I feel to be an opening swing low. So VPOC of the overnight was at 94.75. That was at point and a half we were looking at. And now the next level I would look for this to test is down to that 92 level, 91.25. So here, if I look at the profile, we got a little bit of a low volume area at 94. We're getting some volume at 93.75. I just wouldn't look for a bounce right at this level. But you can see weakness at the bid, a little bit of strength at the offer. This just isn't an area I would look for the bounce. But it might represent a scalp opportunity as well. We are only a couple of ticks away from 92.75. So it's possible. So I'm going to give opening swing low right there at 93.25. So we have our opening swing high, and opening swing low. Can I elaborate a little bit on the topic of the 1 minute volume spike I use and how that might vary by market in terms of how large it is? Yeah, for the ES, and again, it doesn't matter if you use a 30-second volume. Doesn't matter. The point it doesn't matter if you use a 3-minute volume chart either. The point is that you want to get something that shows relative overall volume. And I'm not a time trader, but when I use something as small of an increment as a minute, I can see outliers. I can see where at any given point in time there is a push of volume, and all that does again is point me back to the print to say what's going on at this time. But if you're using oil, you could still use a 1 minute chart with oil. You can use a 1 minute chart with any other instrument. Again, all you're using you're trying to find a small increment of time where any significant push in volume, and the other thing you can use is time and sales. You can use there's a setting within OFA that allows you to look at specific prints. You could say I want to see anything over 100 contracts or 50, and it'll highlight those areas for you. All I'm looking for with that chart, the 1 minute chart, is I'm looking for something that will just flag for me where large amounts of volume. The reason I use it is because when I'm using the volume cluster analysis on a 6-4, with a 6-4 chart, I'm getting a lot of bars. I'm getting a really good feel for the print and the read of the print at those levels. And it gives me the best read at those levels. However, and now I may consider a long on this trade now, just with the second attempt down. The trade I would want to try to get in either here or here, and if strength started coming back in at the bid at 93.75, 93.50, I would just look to get out of the trade. But this is where I might start looking for a long position now. But again, minute to minute, using minute volume, it just tells me where to look. When I'm using a 6-4 chart and I'm using volume cluster, it's great. It's a great tool. It shows me where volume is coming in for that bar. But the only issue I have is especially at the open, is I'll get a lot of bars. It'll start painting a lot of bars, and so every bar has a volume cluster, and I can see where volume is coming in for that bar. But one bar may take 3 minutes to paint. One bar may take 30 seconds to paint, depending on how fast price is moving. So that's really why I use that. So I would say, to summarize that, I would use a minute on everything. And then kind of like with the ES, just over time, I know that if I get a volume spike of 10,000 or more at any given time during the day, that's a big red flag for me. In 1 minute, if there's a 10,000 volume spike, that's a big flag for me. I really want to pay attention to what's going on at the print at that point. Okay, so if the ES is 10,000, what might be oil or Russell? Well, I'll tell you. The oil after open, right? If you're looking at the kind of average in 5 minutes, you're looking at about average of maybe somewhere between, I'm going to say 1,500 to 2,000, 2,000 being a high. So if I divide that by 5, I'm going to be looking at about, in a minute, if I see a spike over, would that be about 500? If I see it in any given minute, a spike over 500 on oil, I want to start paying attention to that in a minute. The Russell, I'd have to go back and take a look at and look at the overall volume. But the process you'd want to go through is take a couple of days and look at the first 15 minutes. So take a 1 minute chart, look at the first 15 minutes of activity, and take a good 10, 15, 30 days, a good month of data, and find out what the average is per minute over that. And then you almost want to do a standard deviation high and low. One standard deviation high, one standard deviation low, to kind of give you a sense of what is significant for that instrument and what is average. And then on the Russell, it might be 100 in a minute, 125. Oil is going to be somewhere around that 400 to 500 mark. So every instrument may be a little bit different, but I'm typically looking at that and getting that number from the first 15 minutes of data, and then doing a standard deviation, one standard deviation, 68, 70% from average to give me a high and low. Does that make sense? Does that help? And so every one is going to be a little bit different. So again, this is where I would have looked to take a long on this trade. See the weakness here at the bid, weakness again, we're getting strength back into the offer. And I could still do that. I could take a long, but this is where I would start looking for price to move up. Even though this isn't specifically the area I would look for. I'd look for buyers to step in down here. If I paint a profile here, what you're going to see is a real nice finish to the downside. See a low volume area here. To get it, once this went weak, a little bit higher, and the strength started coming in at the offer, even to get it at 94.25, the way I would play this trade is to go long and look for price to get through this low volume area. If price gets through 95, most likely is going to tag 95.50, where I'd look to take a contract. Or that would be potentially a first scale with potential much, much higher, all the way up to 2,000 plus. That makes sense? I just was going through another explanation, so I didn't take it. And my risk on that trade, right, even at 94.25, my risk on that trade would have been, if I started seeing strength come back in the bid at 93.75, 93.50, I'd have looked to get out of that trade. So I was looking at a 2 to 3 tick stop on that trade. Because the level that I really want, if it starts coming down and we start getting more volume through 93.25, then the most likely scenario is 92.75 and possibly back down to Friday's high, the first area we were looking at today, 92 to 91.25, and I just don't want to take a trade that far. So there's no reason to. I mean, it could do a double bottom and just bounce here, but I have no desire. So the way I would take that trade is, if it couldn't get through this low volume area with any kind of strength, I would just start to look to bring my stop to break even, maybe 1 tick, no more than 2 on that trade. And, you know, if I get stopped, I get stopped. So the one thing as I look at this auction right now is we're opening up well out of range. I mean, so we opened up how many points out of range? 91.25. So more than 4 points out of range we opened up. And that's pretty significant. And I'm looking at the opening swing, 2 ticks above the open, more like, what is that, 2, 3 points down to the downside. I'm looking to see aggression in buyers to continue this movement higher. And I'm not really seeing that yet. And so it tells me that there's additional risk, potential risk still to the downside. And I don't want to get trapped. The print right now is suggesting good buying coming in and supporting this level. But I just have to question why, if the buyers really have the sentiment to the upside, they already had this thing out of range. 2,000 is definitely within reach. Why wouldn't they have gone after it? Why would I have seen prints on the buy side at 4, 948, 264, 615, 297 down here? It's just the you know, at the open, honestly, there's enough games going on and jockeying for position that there's a part of not conspiracy, but there's a part of me that's always looking for the stop. You know, always looking for the quick money, the short-term retail traders getting stopped. I'm always looking for those kind of plays, looking to see which side gets long or gets short, and then looking for a counter trap, especially on the ES. Be right back. Okay, I'm back. So I'm looking at this picture right now, and I see heavier selling activity at the bid. and that's probably the way I should put it. I see more activity at the bid coming down here, more activity, sellers being held down here, and now I see them stepping away, right? See sellers stepping away, or activity at the bid waning, a little bit more coming back in here. So now that they've made this attempt, what I may look at doing is, if price gets above the opening swing high, looking to take a trade off opening swing high long. All right. Yep. All right. So, the goal of today was to be a pre-market session. So I'll go ahead and end this, and I'll talk to DB about potentially getting some more sessions going. So we'll go ahead and end this. This doesn't look finished to the upside at all. This would be my next trade. There was a potential trade here. Again, I was describing, I can't remember what I was answering a question, so I didn't get into this trade, but you can see it's working real well. Again, I'll talk to DB about where we go forward. All right. Thanks, gang. I'll go ahead and end this. Always fun to spend time with you. Take care.